Hello everyone and welcome to another daily chat with Andy the Gabby Cabby. Hope you're doing all right, hope your day's gone good, and it's been another hot one today, certainly has, hasn't it? And, I hope you've all kept hydrated, safe, and done what you're supposed to do. I'm actually working in the early hours of this evening, so it'll be a little bit cooler. Now, I have a confession to make. I recorded this earlier. I'm not actually here right now. I had some stuff to do, in the early evening, and I'm obviously working in the early hours. So to fill that gap where I would be absent, I decided to do this pre-record and set it up as a premiere, so you guys can still talk with each other on the side and communicate. This subject's quite important. It's all about economics. There was a report in the news earlier that claims that by Christmas we would have entered another recession, which is going to last for an entire year. Now, I remember the last recession, which we may or may not have come out of. You don't know whether we actually really did or not. And a lot of you will remember the previous recession of the early 90s, where house prices crashed, people lost their jobs, and all this sort of thing. Now the last recession, I was in between jobs. I was on the bones of my arse. I thought I'd just about sorted myself out, and the company that I worked for folded because it had problems with suppliers and all of this sort of thing, which eventually proved its downfall, and everybody lost their jobs. And let's just say I lost a lot more besides, and it took a while to pick up the crumbs and the pieces and put it all back together again. And I'm sure there was many with a similar story out there. And here we are in 2022 talking about recession again. We've of course seen that the Bank of England have raised the interest rates by 0.5%. They're saying that's the biggest single jump in a fair amount of time. Doesn't seem like a lot though, does it? When you're talking 5-6%, several years ago now. What seems like several years ago now. But it's mortgage holders I feel sorry for in the main, because even 0.5% on a mortgage of several £1,000s is quite a big jump every month, and I wonder how people will cope with the onset of everything else rising, gas and electricity, council tax. It's all doom and gloom, isn't it? And we have this theory going on, don't we, that is this all leading in one direction, where we might need a pull out of it to assist us, leading to a big reset of our relationships. And that's all I'll say about that. Well, if you haven't done so already, I know this isn't a proper live stream, but if you can hit the like button, that would be good, and let's get that algorithm talking like it would with any other normal thing. Now let's see what the news says about it, and we'll go from there. Yes, the UK will enter a recession that will last for over a year by Christmas. Now this is the governor of the Bank of England. Hell no, it's not. It's an advert. That's technical difficulties for you. Something about a cartoon. Teach me to preload these things, wouldn't it, beforehand? But, we're 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and we get the footage.
Returning inflation to the 2% target remains our absolute priority. There are no ifs or buts about that. At this meeting, the committee voted to increase bank rate by 0.5 percentage points to 1.75%. The committee judged that a more forceful policy action was justified at this meeting, as there have been some indications that inflationary pressures are becoming more persistent and broadening to more domestically driven sectors. Companies are finding it easier to increase prices, and the labour market remains tight. In such an environment, there is a risk that the further jump in energy prices and the higher and more protracted CPI inflation over the next 18 months will lead to more enduring domestic price and wage pressures, which would be inconsistent with inflation returning to the 2% target. Looking ahead, that does not mean we're now moving to a predetermined path of raising bank rate by 50 basis points per meeting, or indeed any other number for that matter. Policy is not on a preset path, and what we do this time does not tell you what we're going to do next time. All options are on the table for our September meeting and beyond that. So the risks around the MPC's forecasts are exceptionally large at present. The source of these risks and the driver of most of the revisions to our forecast since the May report is overwhelmingly energy prices and the consequences of the actions of Russia. Now, in line with the conventions that we use in the MPC, the baseline projections in the August report are conditioned on wholesale energy prices following their futures curves for the next 6 months and then remaining constant thereafter, the path of bank rate implied by financial markets, and fiscal policy evolving in line with announced government policies. The consequence of this is that near-term inflationary pressures have intensified significantly. CPI inflation is now expected to peak at just over 13% in Q4 of this year and to remain at very elevated levels throughout much of 2023. The bulk of that further increase reflects higher wholesale prices feeding through to retail energy prices, with a further large rise in the off-gem price cap projected in October. Now, this rise in energy prices has exacerbated the fall in real incomes and so led to another significant deterioration in the outlook for activity in the UK and in the rest of Europe. GDP growth in the UK has slowed and the economy is now forecast to enter recession later this year.
There you go. Recession later this year. Another one. Now, he mentioned gas and electricity prices there, and I read another thing earlier which actually shut up. That's it, that's got that. Yes, I read another thing earlier actually stating that they're looking at reviewing the price cap more regularly than they do right now. So that informs me that it's going to go up very, very quickly indeed. And I think that's something we need to be prepared for. But the text, I mean, I didn't understand a word that guy just said. I hope you do. But the rough translation of it, the UK will enter 5 consecutive quarters of recession with gross domestic product falling as much as 2.1%, the Bank of England has said. Interest rates have been raised to 1.75%, the highest level since January 2009. And that's about the time, we were all falling to pieces back then. Rising energy prices, spiralling costs at the pump and fallout from the war in Russia has all had major impacts on the country's economy. The bank's Monetary Policy Committee, the United Kingdom, is now projected to enter recession from the 4th quarter of this year. So I wonder if that means more expensive Christmas presents maybe, or not so much money to buy them. The bank's Monetary Policy Committee said real household post-tax income is projected to fall sharply in 2022 and 2023, while consumption growth turns negative. The recession will likely begin before Christmas, during the UK's 4th economic quarter. Following the recession prediction, Shadow Chancellor Rachel Reeves has said it's further proof that the Conservatives have lost control of the economy. I don't know why I read that. We're not interested in politics, Miss Reeves. We're just interested in hard fact and how we're going to get out of this shit. She added, as families and pensioners worry about how they're going to pay their bills, the Tory leadership candidates are touring the country, announcing unworkable policies that will do nothing to help people get through the crisis. And you can do better, can you? Yes, of course. Consumer price index inflation will reach 13.3% in October. That's disgusting. The highest for more than 42 years. If regulator Ofgem hikes the price cap on energy bills to around £3,450 forecasters said. The dire economic conditions will now see real household incomes drop for 2 years in a row, the first time this has happened since records began in the 60s. They will drop by 1.5% this year and 2.25% next. However, the recession will at least be shallower than the 2008 crash, with GDP dropping up to 2.1% from its highest point. The Bank of England Governor Andrew Bailey has told reporters the further sharp increase in energy prices have been the biggest development in recent months. It's amazing how one factor pushes everything else, isn't it? Wholesale gas future prices for the end of the year have nearly doubled since May. They're almost 7 times higher than forecasts had suggested a year ago. That's overwhelmingly a consequence of Russia's restrictions of gas supplies to Europe and the risk of further cuts. Mr. Bailey refused to speculate on the ongoing leadership bid between Rishi Sunak and Liz Truss and what a new Prime Minister could do to ease conditions. What the fuck's that got to do with it? Bank officials said today that the depth of the drop is more comparable to the recession in the early 90s. And I'm sure some of you on the channel are old enough to remember that more so than I did. I mean, I think 98, I was 20 years old, so quite a way ago. Inflation is expected to come back under control in 2023, dropping below 2% towards the end of that year. Remember that, folks. Remember that. And if it doesn't happen, for many in the UK, ramifications of the country's last major economic crash are still felt. In 2008 and 2009, the country's financial sector had teetered on the brink of collapse and major bankruptcies. An official recession was declared in January 2009. At the height of that recession, GDP fell by 2.6 in a single quarter, the same percentage by which the economy expanded during the whole 2007. Inflation is over 9%. We expect it to rise further this year to around 13%. That's a recent tweet by them. The UK economy would take 5 years to get back to the size it was before the recession. In 2020, coronavirus also made a huge dent. A recession was declared during the height of the pandemic in August 2020, and following a lengthy lockdown with shops and hospitality venues being closed, as well as hundreds of companies going out of business, the UK economy suffered. In fact, the country's GDP fell by a staggering 20.4%. Well, of course it did. None of us could go and work and earn any money, with many across the nation losing their jobs or being furloughed for a lengthy period of time. People in the UK have already been warned they face a very challenging winter. I don't know how people are going to get through this in some cases, to be honest with you. And a lot of struggling to pay their bills. I mean, this cost of living payment, for one, I think is going to be eaten up by the next increase. I don't know what you think. Leave the comments below. Some also face choosing between food and heating when the cold weather sets in. This morning it was announced the energy price cap will now be updated every 3 months. The struggling Brits brace themselves for a surge to be announced in just a few weeks. It's not a cap anymore. They'll put it up every 3 months, I guarantee it. A limit on the maximum amount suppliers can charge is normally published every 6 months, but Ofgem said today a more regular update would reflect real costs. Last night, it was reported Britain is set to see the return of stagflation, the condition which saw the country dubbed the sick man of Europe in the 1970s. I bet all the Brexit, the Ramonas are loving all this. I really do. Professor Adrian Papp said all households are facing soaring energy and food bills, but too many have to resort to credit, build up payment arrears, or see their savings wiped out. The incoming administration needs to provide immediate emergency support to the 1.2 million hardest hit households and the 1 in 5 households that will become financially vulnerable as the energy price cap is lifted and the recession begins to bite. paints a very depressing tale, doesn't it, about what's going to go on and what we've got coming. It's really not very good at all, and I think as the months go on, it's going to get even harder still, and we're going to have to find ways of coping. We're going to have to find ways of getting around things if any of this is true. I don't know. I don't have the answers. I wish I did. I mean, the main thing that bites us is the cost of food, the cost of gas and electricity. You know, we're going to have to start growing stuff in our garden. We're going to have to start turning things off. There's going to be trouble in this country in the end. I can see it, but it's all heading towards a destination. A destination at the end where things are going to have to change, and I think it's all manoeuvring or being manoeuvred towards that point. Let me know what you think in the comments below. Anyway, as I said, this was a pre-record which I did earlier today to put this in front of you because it's important information that needs getting out there. Let me know what you think in the comments below and about all this, and I will see you tomorrow with more stuff. There will be one more video out at 9 o'clock, by the way, so check that out. And I'll see you tomorrow. Look after yourselves, stay safe, take care. Toodaloo.